USDC supply on Hyperliquid has now surpassed $4.11 billion, marking a significant milestone for the network's liquidity infrastructure. This growth isn't just a balance sheet number. It reflects a deepening of the network's ability to support on-chain trading activity. The latest split shows about $2.39 billion in CCTP-native USDC on HyperEVM and $1.72 billion in Arbitrum-bridged USDC on HyperCore. HyperEVM provides an EVM-compatible smart contract environment, while HyperCore manages perpetual futures and spot order books. Together, they position USDC as a central asset for collateral, settlement, and market quoting. The significance of this development lies in the role stablecoin depth plays in on-chain trading. More USDC means more working capital for traders, tighter spreads, and faster collateral movement. This is especially important for market makers who rely on liquidity to quote prices and manage risk. The growth of USDC on Hyperliquid is not just about attracting deposits, it's about turning those deposits into real. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Market depth. This aligns with Hyperliquid's broader goal of building a self-sustaining trading ecosystem where incentives, fees, and activity are concentrated within the same system. The deeper USDC balances also help strengthen the Hype token's position as a key driver of the network's economy. With more dollar liquidity flowing through the system, Hype's role in trading fees and builder activity becomes more impactful. Circle's recent move to deploy USDC as an aligned quote asset on Hyperliquid adds another layer of credibility to this liquidity story. This technical deployment reinforces USDC's role in key markets like HIP-1 through HIP-4, where it serves as a primary collateral asset. For traders, the headline is not only about the size of the USDC supply, but also about the liquidity environment it supports. More USDC on the network means more capital is available for spot and perpetual trading, and that translates into more efficient markets. This is important because efficient markets attract more participants, which in turn supports the network's growth and Hype's utility. However, the success of this liquidity story depends on whether Hyperliquid can maintain and expand this depth. If USDC balances remain stable or grow, it will signal a healthy and active market. If they stagnate or shrink, it could indicate a lack of confidence or shifting capital to other platforms. The next signal to watch is whether USDC continues to attract new deposits. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. And whether those deposits translate into increased order book activity. If the network can sustain this growth, it could set a new benchmark for on-chain trading liquidity. If not, traders may begin to question the long-term viability of Hyperliquid's liquidity model. For now, the $4.11 billion USDC supply is a strong indicator that Hyperliquid is building a solid foundation for on-chain trading. The next step is to see if that foundation can support larger and more complex market structures.